no bull market lasts forever. So we're going to have a bond crisis coinciding with a stock market crash and a real estate crash, because everything is in bubble territory no matter how you measure it. And when that happens, all of these baby boomers are going to get scared, and they're going to stop spending, and they're going to say, I'm through with the stock market, I'm through speculating, I'm just going to save.
Ladies and gentlemen, welcome back. I'm so glad to have you here, and thank you so much for your continued support at Patreon and for visiting us at SGT Report, both on YouTube and at sgtreport.com, where we bring you real news 24/7. I have on the line right now a friend of the show and a long-time educator in the space of real money, silver and gold, Mike Maloney. Mike, how are you?
I'm doing great. How are you doing?
I'm doing well. Mike, of course, you're an author as well. You're the proprietor of goldsilver.com and the very excellent YouTube channel, Gold Silver with Mike Maloney. Boy, we're talking on a perfect day for us to be speaking, Mike. It's Tuesday, and we have gold down $12 to $12.63, and silver getting monkey hammered again, down 36 cents to around $17.57. And our friend Turd Ferguson just released an article called Silver Price Management, in which he reminds us that endless paper will be provided to meet demand. Of course, just more of the same, Mike. What do you make of today's action in the face of $20 trillion of government debt and a looming government shutdown?
I think that we are on the precipice right now of another huge crash, but like I've said before, 2008 was just a speed bump on the way to the main event. The Federal Reserve since 2008 purchased the economic recovery with $3.2 trillion, actually more than that, of currency creation. And it is the worst economic recovery on record. The GDP, year-over-year GDP increase during this economic expansion is the worst recorded in recorded U.S. history. So we spent all of that for a purchased economic expansion, and it's weak as can be. And that is a manipulation. It's a complete manipulation of the economy. All manipulations end. And they end with a correction to put things back in balance that ends up being much larger when you warp the economy the way that they have done. Now, you were particularly talking about silver there, specifically, and silver, I was just looking at a long-term chart of the Commitment of Traders report. Now, the Commitment of Traders is a report from the Commodities Exchange on the three categories of traders. There are the commercials, which are made up of the big bullion banks and commercial hedgers, such as the large wholesale dealers and producers of gold and silver and the refineries and so on. And then there's the speculative funds that very often will take the other side of a trade, and then the non-reportables, the small investors, which don't add up to all that much. But when you take the commercials, when you take their shorts minus their longs, you have short positions left over where they're betting that it's going down. And that net position shrinks and grows with the price, and they tend to get more and more short as the price goes up and then cover their shorts as the price goes down. And right now it is suggesting that the price is going to do a pullback, which I'm hoping for. I want as much gold and silver as possible when this next crash happens, because this is going to be, we should have had a crash that was devastating in 2008 that we would have recovered from. If Alan Greenspan had just allowed the markets to crash fully in 2000 and let the free market balance everything, we wouldn't have had to go through the crash of 2008. He caused the bubble, and that was the Greenspan crash. We are about to get the Bernanke bust now, as the manipulation that Benjamin Bernanke did in 2008, 9, 10, 11, 12, 13, and then Janet Yellen ended it in 14 or 15. I can't remember now. All of that manipulation is about to come back to haunt us, because these manipulations warp the economy. But with silver, one of the things, when I looked at a long-term chart going back to 1986 of the commitment of traders, all of the other commodities, I was looking at gold first, and you see that whenever there is a bull market in gold, the commercials are net short. Whenever there is a bear market, they are net long. So they're on the opposite side of the market usually. Now, some really good news is that even during this pullback over the past 5 years, they have remained net short. And when you look back into history, that hasn't happened before. That, to me, is a confirmation that we are still in a bull market, and this is just, even though it's lasted 5 years, this is just a temporary correction. It's not a confirmed bear market that gold and silver have been in. It's a cyclical bear within a secular bull market. There is a third and final phase coming to this bull market that's going to be huge. But when you look at silver, silver is always net short. And I remember reading an article by Theodore Butler about 10 years ago, Ted Butler, talking about how he had analyzed dozens of commodities, and there is no commodity like this where they are always net short. And that just reeks of manipulation. And that was his conclusion back then. And he had done this, he sketched it all out on paper. He printed out charts and made notations and stuff. Now, I just generated some charts where I not only have the silver price and the commitment of traders and open interest, but I wanted to know what percentage of the open interest, the total number of contracts on the exchange, what percentage of them are represented by the net short position of the commercials? And silver has just gone over the 50% market. It's up at like 52% right now of the open interest. The total number of contracts is the commercials betting that silver is going to go down. But what's interesting is January of 2016, this percentage decoupled from the price. Normally, it sort of mirrors the price. The percentage drops as the price drops. The percentage increases as the price increases. But this also reeks of manipulation. The percentage that their short position makes up of the total open interest has just been rising continuously since January, whether the price of silver goes up or down.
Right. Yeah, it sure does reek of manipulation. And, we had Craig Hemke on just recently, and he warned those listening, you might want to wait because we're probably going to get a pullback. We're seeing it now, and it certainly could go lower from here. And I just want to read this to you from his latest article just to get your opinion on why the bankers or the powers that be care so much about silver. Now, I'll tell you what he writes, and then I'll tell you what I think, and then I really want your advice on this. He says, today we want to focus on how the banks and the COMEX alchemize silver. I love that, alchemize, making paper silver. He says, like the alchemy of gold, the alchemy of paper digital silver is also done to manage and control price. However, where the gold price is managed in order to prop up and sustain confidence in the fiat currency system, the alchemy of silver is primarily done for profit. Now, here's my question. I mean, I agree with him, but I think there's more to it. They can't possibly care about silver this much for this long, engaging in this kind of criminality in perpetuity, just because they can make some money shorting silver. Silver has to be far more important to these bankers than we could know.
It is. I don't know what percentage size the silver market is these days compared to the gold market, but when I was writing my book back in 2007 and 8, it was 1/300th the size of the gold market. And the thing is that silver, the metals move each other. When gold takes big leaps in a certain direction, silver will take those leaps and magnify them.
Right.
But the silver market is much more easily manipulated. And if silver was to rise, because it's so small, that's the reason it's easily manipulated. It's a very tiny market. And if too many people come flooding into it at once, it just goes ballistic. And we saw that back in April of 2011. People started coming into silver, and the price goes from the 20s up to almost 50. It hit 48. And So, by the way, name something else in the world that is selling at a discount to its 1980 price.
Yeah, no, it's insane. It's insane. And I remember that so vividly when we were flirting with $50, and we had that Sunday
Yeah.
night slam that took it down, I think, $6 in a flash.
Right, right.
Yeah, they're so criminal.
But the thing is, the gold threatens the dollar, silver threatens to cause the price of gold to rise, and so managing it is in their best interest. But you mentioned earlier that some people are waiting for a price dip to buy. Now, I do both. I dollar cost average in, and I have been accumulating silver and gold on a monthly basis since, I first started buying gold in October of 2002, and the the spot price was about 315, and I first started buying silver in April of 2003, and the spot price was around $4.30. And I have been buying ever since. And I have a monthly accumulation plan. And then when there's a big dip that happens, I'll sort of look at things like the commitment of traders report and technical analysis and stuff like that. I back up the truck and take an extra load full. So I add to, in fact, in the crash of '08, silver had been $21 just before the market crash, and it went down way under 10.
Yeah.
It went to the high sevens, I believe. And during that period of time, I was able to I just about tripled my position. I more than doubled my position in silver. And I did like 6 different purchases, and my average cost ended up being at around $11, $10.50, something like that, with the purchases I did during that crash. I was able to really load up. And, I'm hoping for something like that again, but I also dollar cost average in so that if that doesn't happen, I'm not left out in the cold. I see tremendous geopolitical risk right now, and an economy that is, this economy is high. It is. It's been taking some serious drugs, provided by the Federal Reserve, the dealer that keeps the economy doped up. And all manipulations end, and the more that they warp the economy, because what we're seeing is basically in deflation. The Federal Reserve gets involved, and assets such as stocks and real estates and bonds inflate. And so you're seeing inflation in certain sectors. But then other assets, we've had a big deflation since 2008 of commodities and other sectors of the economy. You see healthcare going up and the cost of food going up, but some other things are dropping and sort of offsetting that. And so you see CPI numbers that are really low. They're actually artificially low. But there is something I in indeflation going on. And I put that I predicted that in my book, that we would go through this weird period of time. When the markets crashed in 2008 and Ben Bernanke did the bailouts and then QE1, 2, and 3, all of the newsletter writers were screaming hyperinflation. And I was saying, no, we have to go through deflation first. And it's something, if your listeners watch episodes 4, 6, and 7 of Hidden Secrets of Money, if you watch 6 and 7 of Hidden Secrets of Money, you'll understand the velocity of currency, and you'll understand why we're going through this, what I call the roller coaster crash. It's been playing out almost exactly as I wrote it in my book back in 2007 and 8. And so episodes 6 and 7 lay out all the reasons why we have to have deflation first, and why, it's what the Federal Reserve can control is the quantity of currency in the currency supply. All the world's central banks can control quantity. What they can't control is the psychology of their populations. They can't control greed and fear. When people feel good and they feel like they can take their friends out to dinner, the economy does well. You have high velocity where each unit of currency is changing hands several times in a year. When people get scared, they tend to save. And when they do, that saved currency, the currency that is just sitting in their piggy bank or their savings account or whatever, the velocity is zero on that currency. And so you average all the units of currency out there, and what you see is that even with this enormous printing that the Federal Reserve did, velocity fell to exactly offset that expansion of the currency supply, and that is the reason we haven't seen huge retail inflation. They added 400% to the base currency, the number of paper dollars that exist. But we did not see prices go up 400%. What happened was velocity slowed to offset that. And we have a bump in the demographics of the age demographics of the United States called the baby boomers.
Yeah, I was going to ask you about that. It's going to be ugly. And go ahead, because it's going to be very ugly. I was going to address that.
It's a quarter of the population of the United States that's about to retire in the next decade. Here, you're going to see a quarter of the people in the United States need to retire or want to retire. They probably won't be able to, but they're in this next crash. If you watch episodes 6 and 7, you'll see why they're going to get scared and why they're going to, they've been burned in the stock market crash of 2000. They got even more burned in the stock and real estate crash of 2007, 2008. They are going to, this time, when a crash happens in stocks and real estate and bonds, because we've had a bond bull market since the early 80s. And no bull market lasts forever. So we're going to have a bond crisis and coinciding with a stock market crash and a real estate crash, because everything is in bubble territory no matter how you measure it. And when that happens, all of these baby boomers are going to get scared and they're going to stop spending and they're going to say, I'm through with the stock market. I'm through speculating. I'm just going to save. And as they save, that velocity drops and drops and drops, and it doesn't matter how much all of the world's central banks print. They won't start spending until they feel that they have enough accumulated to cover their retirement. When they start feeling safe again, that's when some of this currency will come out of hiding. Yeah. And when it does, then you could actually see a hyperinflation even with the printing presses turned off. So I think we're in this weird roller coaster crash, and that you're going to see massive currency creation, but the economy is just going to keep on getting slower and slower and slower as that happens, because velocity is going to drop because those baby boomers didn't save anything.
Well, and I want to just say a couple of things here, and I'll share an amusing anecdote with you. I'm sure you're well aware of the Google YouTube situation with ads really having been cut off largely to the alt media. And amusingly, I was watching your video, World War III Meets Gold and Cryptocurrencies, an interview you did with Max Kaiser and Stacy, and an ad did play. I did a screen capture here, and you'll love this. It's for this guy. You know the old guy who he dresses up, he tries to look like an old man, then he rips off his shirt and he's got ripped abs? Well, the ad was for Get Abs After 40. That was airing on your World War III Meets Gold and Cryptocurrency spot. So I'm going to congratulate you. You're still monetized, or you're being remonetized. And I think that is the sweet spot right there. Those of us in our 40s would like to get ripped abs like that guy. But I want to ask you about Bitcoin being unencumbered by paper manipulation, just spitting distance from its 1327 all-time high. But before we go there, I just want to say this thing as it pertains to baby boomers. You talk about bubbles. I talk about bubbles. We all know the stock market's a bubble, but sometimes it really helps to have quantifiables like you cover in your video, The Baby Boom Tsunami That Is Set to Drown the Economy, in which you remind us not only are these baby boomers, 25% of the population, set to retire and pull their money out of the stock market, the way these retirement funds are set up is they're forced to sell. So when all these baby boomers have to cash out of the stock market, Mike, who's going to be the next sucker to buy these stocks in this bubble market? I don't see too many young people getting into the stock market. Most of these young people I know are saddled with college debt.
Yeah, what you're talking about is the ERISA Act, and that created the individual retirement account in 1974, I believe it was. And when they wrote the law, the IRS exempted, you get to put pre-tax currency into your retirement account. So you don't pay any taxes on that portion of the currency that you put into your retirement account. But they eventually want their pound of flesh. They want their taxes. And so when you allow that to compound, and then when you retire and withdraw that, you get taxed then on when it comes out of your retirement account. Now, they also wrote into the law that you have to start liquidating your retirement accounts at age 70 and a half. And this year, the baby boomers, the very first of the baby boomers, the ones that were born in 1946, are turning 70 and a half. And every year, for the next decade, there's going to be more and more and more people joining this group where they have to sell some of their assets. And so that's a law that basically says that there has to be more sellers than buyers. And the generation behind them is much smaller. The people that are going to be the buyers are much smaller and poorer than the baby boomers. And so to whom do you sell these assets? I mean, the prices have to drop. And then on top of that, you've got just the age demographic. And I've been monitoring this for a decade, and I've made presentations on it and predicted it. And it's going to start happening within the next couple of years here. Just the baby boomers from 1946 is not enough to topple the cart. But as we add more and more of them each year, this is going to become a very dangerous situation. And it doesn't have to be just in a retirement account where it's specified at 70 and a half. It's when people retire, the people that haven't saved much, when they retire, they're empty nesters now. They don't need a 4-bedroom house anymore. So they they put that big house on the market and they downsize to a little condo. And then they live by liquidating assets. They're no longer producing and paying taxes into the economy and spending into the economy while they're producing more than they consume. They are now consuming more than they produce. Yeah. And that basically comes out of the economy. And it's a quarter of the U.S. population.
Right. So the Fed will just have more papering over to do, I guess. I don't know. We all know that silver at these prices in physical form is really the bargain of a lifetime, given all of these bubbles about which we're speaking, most of which are built on paper. But we're preaching to the choir. Most of our friends, neighbors, and colleagues, the people that we meet day to day in our lives, maybe not you where you work at a precious metals firm that sells bullion and whatnot, but in our neighborhoods, most of the people that we know, people we run into at our kids' lacrosse games, at hockey games, these people don't speak this language, Mike. They don't know it. They're not equipped to talk about the Fed. They don't have any idea that the Fed was formed in 1913 to fleece them. So how do we help protect these people other than having these types of conversations which they're unlikely to listen to? And then we should get to Bitcoin. I did want your opinion here on Bitcoin.
Well, before we go there, regarding the Fed, that's the reason that we designed Hidden Secrets of Money, is so that people can learn very easily. Everything is explained in very simple language. The way that currency is created, the way the world economy works, is very complex, and it's purposely complex to obfuscate the fact that it is a way of fleecing the public, so that the few are able to get very rich at the expense of the many. And episode 4 of Hidden Secrets of Money is our most popular episode, and it explains with animations, and it's a tough subject, but this is the easiest way that you can follow this subject, the easiest way that you can learn about it. And then episodes 6 and 7 lay out the case for the deflation and then big inflation or even hyperinflation that is to come. Episodes 6 and 7 show all of the information and how everything is lining up for this perfect storm. And, there's some things happening right now, like the new tariffs just happened, and we picked Canada actually to be the first by raising tariffs. They're 20% on lumber from Canada now.
Yeah.
But it's
Let's go to
interesting.
monetary war with Canada. That makes
Yeah,
perfect sense.
people when I would present facts, things. This is provable data based on measuring economies. The more economic freedom that you have, the more prosperous that you are. And part of that is international trade. If Canada subsidizes their lumber industry through taxation, that means that they are also subsidizing us with cheap lumber. So, I like the fact that I could buy less expensive lumber and the Canadian taxpayers would pay to help build my house. But no, we don't want that. We want to cut that off and nip that in the bud. When I talked about this one time, one of the replies in the the conversations that happened below the YouTube videos, somebody was saying, well, Mexico's doing it, so we've got to do it. Yes, we want an economy just like Mexico's. We're not doing it, and we're one of the richest countries on the planet, and so we want to do exactly what they're doing that makes them poorer.
Yeah. Well, let me just say one thing about the Hidden Secrets of Money, because it really is a masterwork, and I would imagine you write these, and then is it your producer, Dan? Is he the producer-director on these?
Dan is producer director, and he writes a lot of it. Actually, I wrote some of it, and we went around the world to all of these different spots where the history of where you can track the history of currency and the history of money. And there's a big difference, by the way. Watch episode 1 of Hidden Secrets of Money to understand the difference between currency and money. But I had studied monetary history for a long time, and I wanted to tell the story of it. And but what I do is I tell people how it affects them today, how a big inflation that happened years ago centuries ago, is very similar to what is going on today, or how a society fell apart. You start with free markets working, and you start with sound money, and you go to unsound currency and manipulating the free markets and the whole thing. It's the rise and the fall of empires, the rise of dictators. Economics there is nothing that will affect your life more than economics.
That's why I wanted to bring it up. I just want people to know. I think most of our listeners have seen Hidden Secrets of Money, but I just wanted to, first of all, shout out to Dan, because I think it's a masterwork. Having been in the business of producing TV for years and years, I know how much work that stuff takes to make it that great. And as we see this terrible Hollywood franchise, The Fast and the Furious, open to a world box office record of this new Fast and Furious 8, or whatever number they're on, making over $500 million in its opening weekend, I would advise anybody who's listening to this to watch The Hidden Secrets of Money, because then you'll end up with a master's degree of information in economics. You're not going to get that from The Fast and the Furious 8, which is probably designed really to just keep you ensnared and dumbed down. And it's frightening. So I just wanted to give a shout out to Dan and to you for Hidden Secrets of Money. It's a must watch. And it really is an opportunity to get a master's degree level of knowledge in economics, because they don't teach this in colleges.
Yeah, right. It's very hard to learn all of this. And we have professors of economics at colleges now using the Hidden Secrets of Money in their courses, because it explains it so simply in such a short period of time.
Good.
And Dan is responsible for a lot of that. He writes a lot of it, and he connects bits and pieces that, where I was talking about something in some country or another, and then we do voiceovers and so
beautiful animation. Beautifully shot and beautifully animated.
Thank you. Yeah, we have 2 full-time animators that do that, and we've been doing this now since 2009, 2010. And, you know, your comment about people, people are interested in the latest entertainment. They want to know about the latest star. They want to know about the latest movie. And the thing is, those same people are the ones that are really surprised when something happens bad economically, and they weren't prepared for it. They get punished, and then they're surprised, and they want to blame it on other people.
But you know what's funny? I don't mean to interrupt so often, but I just want to say what's so funny about that is that people find economics so boring because of the way the information has been really hidden all of these years, the hidden secrets of money. Once you understand about these hidden secrets of money and the banksters behind the scenes, it becomes extremely engaging and very, very interesting, because really what it is, it's the biggest bank heist story in the history of the world.
Yes. And, you know, once you start to understand some of this stuff, it gets really exciting, and you just end up loving. You know, it sounds weird, but you can actually just absolutely love economics, because you can see what makes people poor, what makes people rich, what makes countries successful, what makes countries unsuccessful. And when you start seeing that, you actually start to become richer yourself. It is one of the things that you need as a basis to be prosperous in this world.
Yeah. Well, if I could just take another 5, 6, 7, 8 minutes of your time, and we'll wrap this up. I wanted to just get to Bitcoin, because it is unencumbered by the paper manipulation at the COMEX, etc. But I do see this article from CoinDesk, which I bookmarked, from April 24th. The UN wants to adopt Bitcoin and Ethereum, and soon. And it just gave me pause. Mike, we don't have to get into conspiratorial territory as it pertains to the creation of Bitcoin, but maybe they really were training us all along with these cryptocurrencies to train even those of us that are paying attention, you know, and consider ourselves at a high level of knowledge in these areas of real economics and real money. Maybe they've been training us all along to be willing to accept digital currencies. I didn't really mean to go there, but after seeing that article, the UN wants to adopt Bitcoin and Ethereum, it made me wonder. I can read the first paragraph. The United Nations is in the final stages of what could be one of the most epic blockchain projects of all time. After successfully using the Ethereum blockchain to transmit Pakistani rupees to 100 people earlier this year, the UN's World Food Program is arranging extra security to ensure it safely executes the next stage of its work. Boom, boom, boom. The UN and cryptocurrencies. That gives me pause.
Right. Yeah, this is the dangers that cryptocurrencies, you know, 100 years from now, 1,000 years from now, people are going to look back on the last 30, 40-year time period of the development of computers, the development of the internet, and the development of cryptocurrency blockchain technology as a single event in human history. And it can either enslave or it can set us all free. And it'll only set us all free if it remains a free market item. Once it becomes centralized, and once big entities like the IMF, or, you know, any, if the Federal Reserve is running the US dollar on blockchain technology, and people abandon the free market versions of cryptocurrencies, at that point, somebody, if they don't like what somebody's doing, they can just switch you off.
Right.
Another thing about cryptos, now I own some cryptos.
Me too.
I do believe in, I think it's an amazing thing, and I support it because I want to see the free market flourish. It is a way that we can free ourselves from all of this government intervention, manipulation, and the theft that occurs because of the monetary system. The monetary system is designed to transfer wealth away from the average person to the financial sector and the government. Please watch episode 4 of Hidden Secrets of Money to see how they accomplished this. But it actually steals part of our lifetimes and transfers that energy to the financial sector and the government. And cryptocurrencies threaten that. However, one of the things that I see is that the world is becoming a more and more dangerous place, and civilizations have failed when they become reliant on a single technology, if there's one single way of growing food, if there's one, the civilizations fail when you become reliant on a single point of failure. And the internet is exactly that these days. Nobody, I mean, I don't know how, I wouldn't survive out in the wilderness. I couldn't like go out into the forest and survive. I don't know how to grow anything. I don't know how to, I've never been a hunter or anything like that. And if the internet fails, I mean, that means and I think that there's a day when that could happen. So I do have a little bit of emergency food. I've never been a gun type of guy, but I've got some guns now. And I have a lot. I've got a good amount of gold, and I've got a lot of silver, because when gold and silver do go to the moon, silver will outperform gold. You're going to get many times the performance out of silver. At first, it's going to lag. I think you're going to see the gold-silver ratio back up in the 80s, possibly the hundreds. In other words, the value of silver will be 1/100th the value of gold. Right now, it's in the 70s. And so you're going to see silver underperform gold a little bit, I believe. But then when the final bull market happens and the rush comes, it'll be the same thing as 1979. Back, in 1979, when gold was passing $400 an ounce, the public really came in and rushed in toward the end of 79. That's when the big bull market of the 70s really happened. And when it was passing $400 an ounce, you got to remember that this is when you could buy a car for just a few $1,000s, and when the average income may have been somewhere like $20,000, or I don't know what the average income was back then, but it was much, much lower than it is today. And the gold had just been $35 an ounce just 8 years earlier. So now it's from 35, it's up to, it's up more than tenfold. And that small investor goes, or non-investor trying to become an investor, goes rushing into the bank and takes $500 out of his checking account and runs into a precious metals dealer and says, I want to buy gold too. And they drop one coin in his hand. And that was the point where he said, how much is the silver over there? Oh, well, you can get 50 of those or 80 of those for each one of these. Oh, well, give me the silver then. I'll take the silver. Right. It's when the public changes their preference from gold to silver, and silver outperformed gold by a long shot. The same thing is going to happen again. And you will know whether this is I knew back when silver was peaking in 2011 that was not the blow-off top for silver, because gold did not peak until August, September of that same year. They didn't peak together. When they are going up and making these huge gap ups where the price is going up big time every day, large percentage moves, and they're doing it together, and they're going to peak on the same day, that is the fear-driven, the panic-driven blow-off top. And that hasn't happened yet. So this bull market is about to enter its third phase. This 5-year grinding correction that we have been in is going to be ending soon. And it'll start rising slowly at first. It's got a lot of resistance to overcome up to the 1800 level and so on. But then once it clears that 1900, it goes past 2000, I think you're going to see gold and silver taking off like a rocket. And when you take a look at the size of the physical markets, they are just infinitesimally small compared to the blizzard of currency that is sloshing around this planet that can come chasing the same tiny little piles of metal that we had back. The gold supply isn't that much bigger than it was in 1980, and the amount of silver out there on the exchanges and stuff is actually smaller. Right. And so you're going to see some real fireworks one day. And the stupid thing is that, or it's not the stupid thing, it's the sad thing, is that small investors are being taken in by the love affair that the markets have right now with the current administration. And, Wall Street is going up, and the small investors tend to buy when they chase things too late in the cycle. And I think we're just about at a top here. The valuations of everything is absolutely insane. Stocks, real estate, and bonds are in enormous bubbles. Gold and silver are tremendously undervalued compared to everything else in the economy.
Yeah.
And right now, the small investor is not buying. They're chasing yesterday's news, and they're buying stocks and bonds at a peak, and where the opportunity is in whatever everybody is ignoring. And right now what you see is China and Russia buying huge amounts of gold. And, there are some months where China, Russia, and India buy more gold than all world production of gold. Their monthly accumulation is averaging about the world production. In those months where it's in excess of the world's production, that extra gold has to come from somewhere, and it's coming from the West. And when all the dust settles, you're going to see the East is going to be much richer and the West is going to be much poorer.
Yeah, absolutely. And since we're pretty much out of time, we don't have the chance here to talk about the U.S. debt ceiling having been reached in this imminent government shutdown. I wanted your opinion on that. But selfishly...
Well, real quick, that's going to be the trigger for the next recession and the peak of the stock markets, I believe.
Yeah, it's not going to be good. I don't see any rosy scenario.
Only if you're a precious metals investor.
Right. Okay. Final question, and I had put this email from an SGT report reader in my Mike Maloney file for the next time I interviewed you. So Jonathan W. emailed me a while back, and he asked, I'd love to move out of the country. I just don't know good options. Could you find a guest who can offer some suggestions about realistic options? I know, Mike, that you moved to Puerto Rico, which is a territory of the United States, but I do think there are some tax advantages. At least that's what I've heard. Could you comment on that? And then since you're so well-traveled, maybe give us some other thoughts about expatriation locations?
I'm not a specialist in that area, so I don't. I do know a lot about moving to Puerto Rico since I did that, and I've lived here for more than a year now.
Do you love it?
And, well, it's a mixed bag. It's a beautiful island, and the people are very nice, but the government is not run well, and the people get suckered in by politicians that promise them more free stuff, and nothing is free. It eventually has to be paid for, and right now, the bill has come due in Puerto Rico, and they're defaulting on bonds, and the infrastructure here. I've been through 19 power outages in the year that a little over a year that I've lived here. So there's some downsides, but if you qualify for the tax exemptions, then the downside is well worth the potential upside. They have Act 22, which is 0% tax on capital gains, and it's a 20-year grant, possibly with a 10-year extension. So no tax on capital gains investments. And then they have Act 20, and if you've got a business that qualifies, if you're exporting goods or services, and many internet businesses where you're exporting intellectual property and drawing currency into the island, that is Act 20, and your income, the flow-through from a corporation is taxed at just 4% then. So there's some enormous tax advantages moving here, and that's the reason John Paulson did it several years ago.
Okay. I'm so glad I asked, because I've been hearing rumors about these tax benefits, federal tax benefits, and this 4% tax. I had heard 8%. So to just get this in quantifiable form, Act 20 and Act 22, that may help a lot of our listeners, especially those that own small businesses, because I'll tell you, taxes, paying the taxes in this country, well, paying the taxes back here in the continental United States is no fun at all, especially when they take our money and they use it to drop bombs on brown people.
Exactly. I'm from California, and there I was, when you add all the taxes together, it's way over 50%. By the time you actually buy something with what's left over and pay sales tax, you're up in the 60% of your income, and your income is part of your lifetime. They're stealing 60% of your lifetime. When you add the state income tax to the federal income tax, 39.6%, and you deduct the state income tax from your income before you file federal, but you end up right at about 50%. And then if you've got a business where you're paying a gross receipts tax and you're paying matching taxes for your employees, and then you take whatever profits are left over and you get taxed on those, and then you go and buy something. In California, you're literally spending 60% of your income goes toward the governments, all the different levels of government.
Yeah, and they just raised the gas tax. So then you're paying tax on all your taxed, already been taxed, paid taxes. Now I've got this little bit of money left, and I'm getting taxed again on everything I buy. No, I think the founding fathers went to battle over far less injury.
The Revolutionary War was a tax revolt.
Yeah. And the taxes weren't nearly this bad.
No, they would be rolling in their graves.
Yeah. Yeah. All right, guys. Well, I'll tell you what. You can't get education like this from watching CNBC or CNN or Fox Business. I mean, I really don't think you can. And if you want to get a master's degree level of understanding of how the real economics work and the real monetary system works, check out Hidden Secrets of Money. You can find that for free on Mike's YouTube channel, Gold Silver with Mike Maloney. And Mike, do shout out your excellent website too.
Everything is also listed on goldsilver.com. And if any of your listeners are interested in purchasing any precious metals, there is a discount code that we have generated, and that is SGT Report, one word, all capital letters, SGT Report.
Oh, wow.
So goldsilver.com, Hidden Secrets of Money, and the book is Guide to Investing in Gold and Silver.
Well, thank you so much for the coupon code. That's excellent. All right. Well, guys, thanks so much for tuning in. And Mike, thank you so much for being generous with your time today.
Thank you.
All right. And guys, for real news 24/7, do visit us at sgtreport.com. Thanks so much for listening. Have a terrific week. Bye-bye.
It's a game. It's a con. Most importantly, it's a fraud. But yet this is still the system that passes for a pricing scheme for gold and silver.